is a very intensive session. We hope that you pay attention about the main issues of company tax. Will be shared by Teresa Low. I'll switch the screen to you, Teresa.
Okay, thank you, Ivana.
Yeah, you can accept.
Okay, can you all see the slide?
Very good.
Okay. Okay, shall I start now?
Yeah, go ahead.
Okay. Very good morning to everyone. I'm Teresa from Adrio Tax Sdn Bhd. Today we are going through this company tax issue, which I will cover this mainly on compliance matters on all the files that is required to file by the company. All right. So of course, we'll go through the estimate of tax payable and the payment of installment. Then the scheduler tax deduction, which is known as PCB. Then the return by employer, the Form E, and this duty to furnish particulars of payment made to an agent, dealer, or distributor, which is filed through Form CP58. And lastly is the income tax returns, the Form C. All right. And then after the compliance matter, I will also go through with you all on some of the withholding tax issue, which there are certain forms that you need to file. You need to use certain form to file based on the particular withholding tax that you are paying. Okay, and then we'll go through some double tax deduction and some tax planning for directors and employees. Okay, so first, of course, every company when you start, the first thing to start is submit a tax estimations, and after that you have to pay the installment payment according to the tax that you have submitted. So the company is required to submit their tax estimations to this income tax 30 days before the beginning of the basis periods. Okay, so for example, if your financial year ending 30th June 2017, the initial tax estimate has to be submitted by 31st May 2016 for year of assessment 2017. All right, and besides initials, you actually, and every company is allowed 2 times of tax revisions for every year of assessment via the form CP204A. Okay, so the first tax revisions is in the 6 months of the basis period, and the second tax revisions is in the 9th month of the basis periods. And of course, if the company, when the company first commence its operation, we cannot ask you to submit your initial tax estimation before 30 days of the beginning, because you don't even know the company when the company is going to be started. Okay, so for the company which first commence its operation, the form must be submitted to the income tax within 3 months from the date of commencement, and thereafter you follow back the regular rules, which is no later than 30 days before the beginning of the basis period. Okay, and there is also some rules on how much you can estimate. Okay, so the tax estimation for a YA cannot be less than 85% of the estimate or revised estimate for the immediate preceding YA you have submitted. Okay, let's say in the preceding year you have already submitted 10,000 tax estimation, then that means when you want to start a new tax estimate,